I know it's beautiful. It's the 10th hole of the Banff Springs Golf Course, but so are my charts. Let's go play now. Good day, everybody. It's Greg Schnell, and I am here with the September 14th edition of the Weekly Market Review. Thanks for taking the time to join me. Lots to talk about. Markets are moving up nicely, and we're starting to find new highs in other countries like Canada and France. So that's very bullish. Want to keep watching that progression. That's the good news. To find my blogs, go to StockCharts.com, articles tab, and on the right hand side you'll find a drop down menu. Click on the Canadian Technician. Don't ignore this chart or chart watchers, and please hit subscribe at the bottom if you're interested. Contact information for me, Greg S at StockCharts.com, Twitter at Schnell Investor. And our agenda this week is going to cover off US dollar breaks the uptrend, markets close at the top end of the range, which is beautiful. Industrials and commodities surge, industrial commodities surge, oil stocks run and should pop in the week ahead with the pressure from the Middle East on the weekend. Gold breaking down with bonds and the yen. And industrials and banks roar. So lots going on here. I think I like the market setup here and seems to want to run. So let's jump over into the charts. Actually, I want to go to check this out first. So let me just pull this out. And what I want to show you here on this page is this was the Canadian market, but energy and financials just had a big week, and crude was actually down on the week, but look at these energy stocks pop. They just kept running. And although the material stocks look weak here, actually what that was gold was pulling down, but copper was going up. So a lot of the gold miners pulled things down, and specifically in the gold mining sector, down like 5% this week. The technology sector, there's been a rotation out of that, but I actually think this is an okay rotation, and in a few months technology will start to pop up again. But these oversold areas are really starting to run on the pullback in the bond prices are falling, and the bond yields are starting to rise again, and we'll try and cover that off if we get time. But there's lots of other stuff that's setting up beautifully, I think, and we probably want to pay attention there. So here's utilities, income trusts all starting to weaken, staples down here. I am surprised the Canadian industrials were so weak, but now let's go down here. This is the global view. Like the Russell was up almost 5% on the week, but look at Japan, South Korea, like these Asian countries are really starting to pop. They look very good. Here's the Shanghai up 1.5% again. India starting to look like it's going to turn around here, up 1%. S&P 1%. France popped to a new high. Canada popped to a new high. So lots of things going on, and I still like the setup. On the materials or the commodities, steel really had a big week. Boom, baby. And rare earth metals up 7.5%. Lumber, the wood ETF is starting to break out. We'll cover that off. Lithium starting to move. These were big moves, and hopefully you've been part of them because they've been really nice to watch. Gold down only 1%, but as I said, the gold miners down hard. And the silver was down 3%, and silver miners were down 4%. Crude was off 3%, but the energy sector was up, and you'll see that in just a second here. So when we go into the U.S. Stuff, energy and financials did really well, and it puzzles me. Oh, sorry, I grabbed the wrong one here. Let me find the U.S. version. Where did it go? Sorry, I've screwed that up. This first one was no, we haven't covered this yet. I'm sorry, I should have flushed these out a little better. The retail ETF here did a huge move, but look at the exploration and production considering oil was down and financials were big, but energy across the board, other energy stocks might have pulled back a little bit, but in general they were up okay. Materials, all the other stuff starting to rock. Industrials breaking out to new highs. Semiconductors, this is beautiful stuff. So anyway, sorry about the confusion there, but finally getting a big move here, and I think it's broad-based, it's good, and look what's at the bottom, utility, staples, and real estate, so that's very good. And again, technology's been a crowded trade, so everybody all of a sudden starting to spread out doesn't really make me get too worried. Let me just go pick a different window here, not from preview, quit, and then now I just want to go, got a different tab here that's all set up. There we go. Okay, so for the CRB, what I want to show here is this is down in the bottom right hand corner, but monthly chart, and so far it's an inside month, but look at how much we've recovered coming off these lows, and I like the bounce off the lows. And look what the US dollar did this week, it actually broke back down. So that setup is warming my heart actually a little bit. And what we see on the CRB is we're back above the 10-week moving average. We do have this one downsloping trend line in the PPO that I would like us to get through, and I think with the pop in oil over the weekend, we'll probably see that start to come alive, so that should be wonderful. We do have the DBC, the Total Commodity Tracking Fund, and it's still got this uptrend going, but it's still juggling around here. It's not great. I don't want to see this roll over right here at zero, but I think with the pop in oil, these things are all going to start to get some money flow. So oil had moved above the 10-week last week and then pulled back down a little bit this week, but natural gas kept going. Heating oil or diesel fuel pulled back just to the 10-week, and gasoline is wobbling around down here. It still hasn't started to get anywhere near its 10-week moving average. Corn had a nice week up, so did soybean, and so did wheat. So all three of those popped nicely, and we'll see that with some of the other ag names. Precious metals obviously rolling over quite hard, as we already talked about. But look at copper breaking through this downsloping trend line that goes back into the spring. I really like that, and this aluminum ETF here, it's okay. It's not really helping me with any sort of a move, but I'm starting to like stocks like Alcoa. They look fantastic. The livestock index really had a big surge this week, so another piece of ag that looked good. Sugar was back above its 10-week, coffee back above its 10-week, and cocoa back above its 10-week, cotton above its 10-week. So all of the growing stuff all took off. Marijuana, life sciences stuff just had another pullback this week, but we're still waiting for this trend line to start to break here and get some movement. And I think if we get that, that could be an area to get back into, but so far it's not yet. Coal above its 10-week moving average. The steel ETF, big move this week, above its 10-week moving average. So as you can see, all these commodities started to kick it up. And these, hopefully you've been riding these, but this lithium and rare earth metals back above their 10-week, they were big moves already. This is up over 10% in a couple of weeks. So the energy index is just kind of hovering in here. I still think there's room to the upside on the energy stocks, and I think with the oil pressure this weekend, we'll probably see more of that, and we'll just want to make sure that that holds up. But the precious metals index here has rolled over, and I think that's on the back of all of that kind of tips, treasuries, gold, yen, all of that stuff was kind of moving in correlation with one another, and they've all seemed to have reversed at the same time. But the one I like to show you here, this one is the livestock index, but let's get on to the industrial metals. And this is breaking back above its 10-week, and it wouldn't take much for this PPO to break a one-year downtrend line. I'd be very excited to see that. If that starts to pop, I think you want to really be on board with these, especially as the industrials break out to new all-time highs. So the commodity index total return still down sloping here, but trying to get back above its 10-week moving average. That's what we'd like to see next. Okay, Baltic Dry Index soaring up here, pulled back a little bit this week, so that wasn't anything really helpful. But look at this XLE. This looks ready to break out to the upside. So I think there could be some really nice opportunities there. Moving on into the energy, different areas directly. Here's crack, and what we see, this is the oil refiners ETF back above its 10-week. We got a positive turn on the PPO, and this is our second higher low on the PPO. And again, I think the refiners will do very well on the back of the news out of the Middle East. So that should start to put some pressure on this and move those stocks to the upside. And of course, those are also some of the big name oil companies. Along with that, we've got the frac unconventional oil ETF, and it was right up. The PPO had just moved above zero. Actually, I have MACD on there. That's just crazy. Let's go change that to a PPO. And what we want to see here is obviously we want to see that keep climbing above zero. So that would be helpful. And with that, on this weekly setup here, the full stochastic starting to get back above 20. This downslope in relative strength, or not in relative strength, on the PPO starting to break out. All of this looks good to me. Price action back above the 10-week and trying to break this really fast downtrend here. I think it all sets up well with the US dollar starting to pull back. For crude oil, obviously we're caught in this close range at Brent crude was up almost 20% on the open on Sunday, and then what we see is a pullback, and so far it's hovering around the 13% level. The Strategic Petroleum Reserve got opened up, so that should help alleviate some short-term issues, but I think raising the risk level on the Middle East and the global oil, that's probably going to stay with us for a while. So I expect this oil trade to probably be something worth holding on to. And we were hovering right around zero here with West Texas crude on the daily chart. Want to see that reverse back up. So this would have been a failed breakout if this kept drifting lower, but looks to me like it wants to start to run. So anyway, we've got that starting to work in our favor, and the continuous contact on light crude daily again here, just jogging in this sideways range, and we want to see this start to push. I don't like the PPO flattening out here. I would have liked to have seen a surge all the way up into positive territory. We haven't quite got that on Friday's chart, but obviously Monday's data should help influence that direction. So looking in on natural gas, this just keeps moving, trying to get back above its 40-week moving average now. So it's been a nice breakout and starting to run. And all of the natural gas, so here's Cabot Oil and Gas, it's trying to get through its 10-week moving average. This ratio is still very stubborn, where the natural gas ETF, natural gas stocks or oil company ETF, hasn't started to pick up yet, but we do see nat gas doing really, really well, and the actual ETF of the oil company is back above its 10-week, so we want to see that continue and progress. Looking at nuclear, this has been trying to bounce up, again, sideways range for a year and a half, a little hard to get too interested in it. Uranium, though, has climbed all week, and I mentioned here on August 31st, was this a washout low? And perhaps uranium can finally start to climb if we start to see these industrial metals start to move, so there's some optimism there. What I don't like is this URA, there's gold, Barrick Gold is in this thing, but it's above its 10-week moving average now, and it's starting to move, and Cameco had a big week, but again, that dog been sitting near its lows for a while, so if it started to rally, great. Maybe it could finally break through this downtrend. And if industrial metals in general are going to rally, that might help Cameco. I drove by their head office in Saskatoon just a week ago. So copper, a slight uptrend, higher low, so positive divergence on the full stochastic, and now it's starting to take off. It moved back above its 10-week, and it's broken the downtrend line on momentum. I like all of that setup right here. All of this looks like it wants to start rocking forward. And here we've got copper on the really big picture, and you can see the nice move copper had this week and closed right at the high of the bar. So 2 weeks ago we were down here at 250, we're at 270 already. So copper up a good 10%. So nice. I think 8% or something, really good. PPO just starting to turn up again on the weekly chart. I like that. The ETF tracking copper sitting right on, if you just use closing data, sitting right on the trend line, and we want to see that obviously break out, so that would be good news. The copper miners all of a sudden put on a big move as well, off 15.5, so 10% on that would be $17. It's already almost at $18.50. This thing has moved almost 20% in a couple of weeks here, so huge move. And looking at the steel ETF, look at this move. This was up 10% on the week. Really nice push. Hopefully you've been nibbling away at some of these companies, but they're all starting to run. And again, we got our full stochastic turn, and that was a nice break. On the aluminum, this ETF just doesn't move enough to give us good data, but anyway, it's all I've got. XME, the metals and mining ETF, starting to run here with industrial metals, so I like that. And if we can draw this trend line right through here, that should be that would be nice to see the breakout. And we'd also like to see this big downtrend in relative strength start to break out as well. XMA hovering right around the $14 level. This one has gold, has a lot of gold in it, so it started to perform before all of the industrial metals, but it also had, now it's pulled back with the gold pullback, so bit of a mixed blessing on that one. Here's gold actually rolling over near the top, and the relative strength line, if this upsloping trend line for 1 year starts to fail, I'd probably want to get out of it. I would probably draw another line here off the April lows up through this low, and if that line started to break, I'd be more defensive on gold again. But I think the industrial metals are the place to be now, so I would probably rotate into some of that. And you can see gold's trying to hold new 6-month lows, or 6-week lows here. And if this can hold up, then all of a sudden, we could bounce higher. But it just doesn't seem like, I think that seems odd. We'll find out how it behaves on the back of some of the rising tension in the Middle East, but that isn't one of my kind of go-to thoughts about that whole trade. So we can see gold just on this big base that it had built and rolling over. That's not a big deal. So a little healthy pullback here, and we'll look to get back on board once the PPO has come back and kind of reset at a lower level. GLD, just tracking, showing us the same signal, so nothing really there. But looking at GDX, that one really had a powerful move down 6% below the 10-week. And that was a nice place to get on board. Now it's a nice place to get off. PPO rolling over at quite a high level, so I would expect some pullback. So not much more on the gold. Silver, same story, so I'm just going to jump ahead so I can cover off more stuff today. The lumber ETF, or the lumber contract, had a big outside week this week and jumped up to new 2-month highs. And the PPO is just moving above zero here. Oh, not quite, just a hair under zero. So as this starts to run, look at this wood ETF breaking out of what we call a bullish wedge, where the highs are dropping at a faster rate, but the lows are holding, and so all of a sudden this thing starts to kick up. That's a really nice move, and I've been pointing out some of the lumber stocks recently. So here's an actual chart of the wood ETF, and look at my PPO breaking through this 1-year trend line here. Price is breaking through the trend line. Full stochastic moving above 50. The relative strength line being broken. It just all sets up that I like the way this starts to look. Rather than just click through all of these, I'm going to jump down to the autos. And you can see Ford had another up week here and trying to bounce right off the zero level. That would be quite bullish. Getting in on Fiat Chrysler. What we see here, it had a sideways week this week. It didn't really do a whole bunch, but it needs a little pop to get it through this 1450 level. And we'll just have to see how that works. The PPO right at zero, so it's kind of flatlining in there, but I'd like to see that one start to turn up. I like the full stochastic had started to move. General Motors just paused this week. It's trying to break this big downtrend line in momentum as well, so that would be helpful if it could get through. Honda, so as the yen starts dropping, all of these Japanese companies start surging. And so these things have had ballistic moves, and you can see this downsloping trend line starting to break. So one nice way to play the the change in the Japanese currency would be to go pick up some Honda Motor, maybe some Nissan, and maybe some Toyota. Some of the Canadian auto manufacturer names here, Linamar starting to break out to the upside, and a big 2-year trend line here. If it started to break through that, we'd be happy to see. Magna is a big company, also available in the U.S. MGA would be the U.S. ticker, and the full the scooter ranking is up at 90% now. This thing is rocking on, and there's a downsloping trend line here that it has broken through. MRE, Martin Ray, this one's also breaking out to the upside. The PPO's breaking through its downsloping line, full stochastic above 50. All of them are looking good. Here's Nissan, and you can see the stock had been downtrending on the PPO, starting to break out back above its 10-week, full stochastic moving above the 20. So lots to like here, and again, this is also a play on the Japanese yen, where these Japanese companies can start to run. Ferrari hasn't done that well. It had a tough week this week, down 6.5%. So I would be inclined to just kind of stay away from the name until it starts to give us a bit of an uptrend rather than a downtrend in momentum. Toyota Motors, look at that breakout, big and beautiful, and again on the back of the yen, so that's nice, and PPO pushing higher, the scooter ranking jumping up above 75, just gotta like everything about that chart. Tesla had a good week, jumping above its 10-week for the first time. PPO was in a downtrend here, all of a sudden starting to break above it, so that would say getting on board with Tesla. I think my bigger concern is, again, just all of the issues around that. It's a volatile one, play it if you want, but this is definitely a bullish place for a bounce on Tesla. Okay, Tata Motors out of India is actually trying to turn up again. That chart's been in a massive downtrend. And let's just quickly jump to the weekly charts on some of these European countries. So Germany would literally only need half the push it had this week to get back above new 52-week highs. Wouldn't be all-time highs yet, but it doesn't take much for it to get going here. And it's bouncing off the zero. I mean, this is just a pretty bullish place to look. So as long as everything keeps rocking, I'm expecting all of these charts to keep going. For France, on the weekly chart, look at this breakout here to new highs. That's got to be bullish, right? You don't get new highs in a bear market usually. So here we have the Amsterdam Exchange, and it's about to break out to a new high. It closed just short of the previous one here, but above the three others. So wouldn't take much to make that one start to move up. Sweden, same sort of thing. It's trying to push the new highs area here. Had a big week and only 1 week back in April, slightly above it. But in general, you get the idea. This looks like more that it wants to advance than not. So I'd say the Mario Draghi final press conference was well received. Looking at the Shanghai Composite, it kicked up above its 10-week moving average or 20-week moving average this week. 20-month moving average this week, and started to really go. It's back on a positive signal, and on the weekly chart again, it's the PPO turned up right at zero and is now starting to cross. That's just bullish for everybody who knows how I follow the PPO. But this horizontal trend line here right around 3,000 starting to break above it. I think that's a wonderful place to get on board. Here's the Hang Seng, and it's having an inside week so far. And what we'd like to see, obviously, is that this continue to push up higher. Still with all the protests there, lots of issues. We still got a down sloping PPO. If this could bounce above zero here, this would be very nice. So we'll keep watching for that. But obviously, the price action was pretty good. Once again, that was a monthly chart. Here's the weekly. Had another good week, but we still need to get this momentum trend turning up. The Nikkei. This is one that continually has been working hard, but now that the yen started to drop, moved above its 20-week and 40-week, broke above the previous highs in July, and would only have to get up, another 500 points on 22,000 to get very close to 52-week highs. That looks to me like that's what's going to happen, and we see this downtrend in relative strength starting to break. We see a PPO turning up right near zero. All of this suggests these want to start to go higher. Australia, let's get over to the weekly. On the weekly, just kept climbing, so that's bullish. Gotta like that. And the Canadian stock market, this is the monthly. Let's go to the weekly. On the weekly, broke above, and went on to new all-time highs. So very, very bullish. Again, starting to see new all-time highs on country indexes around the world. That says something's going on. So don't want to get too bearish here. Brazil also looking good. I'm just going to leave the rest. We'll go down here to the US ones just to show you how close we are. Here's the US weekly chart, and we're just spitting distance away from the highs in mid-July there. Wouldn't take much, and we actually went up and tested them already this week. I think we have the power to go a lot further, so we'll keep watching for that. Unless the market is really rattled by the oil issue. But again, with the Strategic Petroleum Reserve, that should help ballast some of that. And I don't think it's enough that it's going to start to pressure the U.S. economy quickly. So we can keep watching. I mean, if crude jumped up to $60, it was up there in April. So not that big a deal. The NASDAQ weekly, again, trying to break through to new highs here. So they're sitting right on the edge. I think I said earlier they had actually broken, but they're so close. I think it's going to happen. Here we go with Great Britain, and it's still trading inside its last month trading range. PPO right at zero, and the real question is which way does that one want to bend? I don't have an answer for that. I do like the look of the Kospi chart. This is the monthly. We'll just click on the weekly here. This one's starting to climb, and again, as a neighbor to China and Japan, be nice to see this one start to turn a little bit higher here. So it's got to break this down sloping trend line and get going. And if that could start to kick up, I think there's a lot of power in that. I'll just show you FAN and TAN here while we're here. It looks like we're going to break out to a new high. And as we do that, I think this whole area could probably be a nice area to trade into through the fall. And we've got the ETF for solar, and it's holding around its 10-week moving average. And there's some nice names in that area, but we won't have time to get into those today. Okay, I'm going to jump back up and cover off some of the transports here. Just go through some of that data because I think it's pretty valuable to see just how much this is shaping up. So the transport on a daily basis just keeps whipping back and forth, but this relative strength downtrend line goes back almost a year. Looks to me like it's going to get broken this week, and that would be very important to start to see the transports outperform again. And we have the weekly chart. That was a huge week in the transports, and PPO turning up right at zero. We haven't quite got a positive cross on our signal line yet. Wouldn't take much to get going. Actually, we did cross it, so that's positive, nice. And as we break through that, any sort of downtrend here in price, a pop above, this all looks good. So I'm on board with the transports kind of telling us that things are getting better. And again, industrials hit new all-time highs, so we want to see the transports start to follow that. Airlines, 3 years of sideways price action, so hard chart to get too in love with. But the PPO is starting to turn up here and went positive this week. So back above both moving averages, so that's good to see, the 10-week and the 40-week. The railroads are the one that I want to mention here, and what you see on the daily chart is it's broken this downtrend in momentum that goes back for 3 or 4 months, or in relative strength compared to the S&P 500. And we see this downtrend on the PPO, and now we're moving back above zero. This is very, very bullish. Like to see this, and as it starts to pop up here, that's a good reason to get back on these railroads. They look like they want to go higher. We might find some of the transportation stocks get paused with the bump in crude, so keep watching for that. But In general, the railroads, like you got a full stochastic buy signal. It's trying to turn up right at zero here on the PPO, so that's all good. And we're back above the 10-week and the 40-week moving average, so both of those look great. Getting into the trucking specifically, I mentioned that this had hit new 52-week highs, and it just had another big week, popped right up here. And as it breaks out, anytime you're hitting new 52-week highs, moving above zero on momentum, I think that's just a positive. When we've broken through this long downsloping downtrend that started pretty much when the tariffs discussion started, there hasn't been a whole bunch of action in this trucking, but now all of a sudden it's starting to kick up. So I like that. And look at our RSI moving above 65. If it could get up into the 70 level, we're starting to talk about a new bull market there. We're at 52-week highs, so I think it's just a matter of time before it comes. The autos are wiggling sideways here, nothing really aggressive one way or the other. But in general, I like the charts that we talked about earlier. The Japanese ones starting to turn up. Ford, GM, and Chrysler, or Fiat Chrysler, all look pretty good. A couple of other industries. So XBD is broker-dealer. It's a leadership industry. And look at that beautiful move. It's got just a hair to go to get into new 52-week highs. So I think we'll probably get that. We've broken the downtrend that we've had in relative strength going back to mid or early 2018. That's a big deal for me. So I like to see that breakout. PPO moving back above zero, and if it could break through this downtrend in momentum, I think that's just all positive. So you want to keep watching for that to happen. We'll see how the market absorbs this crude news. Utilities here holding up near the highs, but again, I think there's some other areas that are moving faster. Here's XLI, the industrials, and it broke out to new all-time highs this week and closed up there. So one of the big benefits of that is if we see the transport start to follow and hit all-time highs or 52-week highs, very bullish. So we've got trucking hitting 52-week highs. We've got a resurgence in the rails coming in. The airlines just kind of waddle sideways. But I think there's a big opportunity here all of a sudden to start to see all of this, the Dow signal kind of kick it up. And on the weekend, I did a presentation about the PPO, and I mentioned that the Boeing chart looks really nice, starting to turn up with the PPO right around zero. So some nice ideas in the aerospace, and we'll probably see some of the defense stocks start to run. But in particular, I like these coal names, steel names, copper names, rare earth metals, lithium, some of those start to pop. I think all of those are nice areas that could have some big upside over the next few weeks. So keep watching that. Okay, let's jump into a little bit of breadth here. I'm not going to go through all of the breadth charts, but here's the NASDAQ breaking this 2-year downtrend. I mean, that's just bullish. Just bullish. We just have to get on that trend, and it looks very good. We want to see it start to get more new 52-week highs than 52-week lows. I'd like to get above this 100 level again. So if we could get a sudden surge in that would be beautiful. So hopefully that shows up this week. The advanced decline line for the New York Composite pushing up to the highs here, very bullish. And we see the price action getting back up to this 13,250 level. Can we finally get through it already? I think we will. So here's the Dow Jones high lows for comparing the number of 52-week highs to the number of 52-week lows, and we're sitting around this 100 level. Again, we want to get a surge here, so hopefully that kicks in the next few weeks. This is Arthur Hill's advanced decline percent, and the way this broke out in early September to new highs. It continues to run on here. Had another good week. So lots going on as we try to take out the highs, but it looks to me like we have enough breadth to actually push up to new highs, and then we'll see how we hold those. I mentioned the Canadian market had broke out to new all-time highs. The advanced decline line hasn't broken this downtrend yet, but I think with the surge in energy this week, that'll probably push that forward. The high lows for the TSX still stuck below 50. And those oil companies have a lot of room to run before they're starting to make 52-week highs. So that's not going to help it on that side. The Alexander Elder new highs minus new lows over a 5-day total up around 800. I mean, you're in positive territory. That's bullish. So gotta like that. NIMO, the McClellan oscillator, this is back up around 600 or 700. Bullish. It's when it goes below 400, it's a problem. So have to like that one. That was the summation index actually. And here we see the summation index going back for 15 years. And you know, we're pushing up here hard. So this looks to me very bullish, and until it starts to roll over, again, this can actually be rolling over and dropping, and the market can still grind higher. So it's not necessarily like all in here. You know, look at all these fluctuations, and the market was just pushing up through the whole thing. So this is still very bullish. I like it all. Here's the NASDAQ summation index running nice and hard. I'm not going to get into the bullish percent indexes. They've all improved. The percentage of stocks above the 200-day moving average have jumped up on every one of these. So really nice to see breadth starting to hit the whole thing. For the energy sector, let's just go to this chart just a real simple chart, but here's oil hovering right around its 50-day moving average, but the bullish percent index moved back above the 50-day moving average, and it's also sitting right at 50. Obviously we'll probably get a pop on that tomorrow, but XLE is up, XOP is up, and OIH is up, all trying to get through the 50-day moving average. Very important place for us. The fact that we get some thrust from the Middle East might actually help move money into the area aggressively, and we should have a rock and roll sort of week on that area. This bullish percent index, I have to explain what this is again. This is the MACD for the bullish percent index, and it's starting to turn up again, so this is a very bullish place. And what I've overlaid on the chart, so I've hidden the data from the bullish percent index, but I've put the OIH on this chart, and if we could start to get another bump off these big lows here, this would be a nice place to look, and I would expect we get some sort of thrust into those as well. My one pager on gold. Gold is still above its 50-day moving average, but the bullish percent index has fallen below its 50. GDX has fallen below its 50, and the ratio has fallen below the 50-day moving average. So for me, gold would be sell or at least reduce position size. We do have quadruple witching coming up on Friday. So again, that'll be a high volume day, and we'll see where the market wants to settle out by then, pricing in some of this Middle East risk stuff. We also have our good friends the Fed having a meeting this week, so I'm sure that'll generate some tweets. So with the Fed coming, with more decisions on rates, and we're expecting a drop in rates, very interesting, a drop in rates as all of a sudden commodities surge and oil surges, which would be a little bit inflationary. So the question would be, does the Fed still go? And I don't think they're going to change their information on a one-day or one weekend event, but maybe that sets up more for the next meeting rather than this meeting. So we have 5.8% gain so far from August 14th, and really right around August 23rd here was when we bottomed out and off we went. So big beautiful move up there. The year-to-date performance for the S&P 500 going back, we're sitting up here at 19.97, so 20%. Nice. Just comparing all three indexes, here's the S&P 500, and again, it's pushing up into the top right-hand corner. So is the NASDAQ Composite pushing up here, and the Russell had a gangbuster week. And again, if we draw a trend line across these highs here, Russell actually broke out of the downsloping trend line. We'll see that on the next chart. S&P 500 pushing up here above that 300 level or 3,000 level. And what I'm a little bit worried about is how we handle this PPO line that's been trending down. We'll see if we have enough strength to rub up against it and kind of hold up there. I expect we do. So the NASDAQ, even though the tech stocks got hit hard this week, the momentum name stocks, the NASDAQ actually just performed in line with the S&P 500 through it all. So I'm not expecting anything too sour here. This is the big uphill trend line for the NASDAQ 100. And again, I don't want to see this line broke here. So I'd like to see some of the NASDAQ 100 start to kick it up a little bit. The New York Composite, this looks like to me, this is a monthly chart, but it looks like it's ready to break out to the upside. How does that look to you? Again, trying on a monthly basis, if we closed here, this would be a new 52-week high, so that would be great for a closing basis. Now, intra-month or whatever, we're right up here, and you can see we were up here. We closed up here, we closed up here, we closed up here, we fell down, now we're back up here. Really important range, and so if we get through here and this starts to give us the positive cross, I mean, it's just bullish and we want to be that way. So here's that Russell downtrend I mentioned, and we're starting to poke back up above it. The relative strength downtrend is starting to break out, and the PPO turning up right near zero here. We want to see this get all the way through and get back above this downsloping trend line. Might be a lot to ask with the volatility in the Middle East, so we'll see. Just standing back, this support level continues to hold, called it 1475, right in here. And again, if we're pushing up, it wouldn't take much for the Russell to really start to take out prior highs, so that would be good. The IWM, just tracking it, same thing here. We just see so this has the dividend yield in it, and look at the big week we had here. Lots of volume coming in, best volume of the year for this ETF on the week. So I think we're definitely, my bias would be that we're definitely going higher. Okay, so the TSX again broke out to new 52-week highs and is trying to turn up here on its PPO on a weekly chart. This would be very bullish, so we need another week, and I think with the oil stocks kind of rocking it up there, that should help. This XVG continues to work back and forth, much like it did in the year 2000, 2001 here. Just keeps waddling along. Now, once again, it's back above its 40-week moving average, so it's been a real hard one. I had this filled in as yellow market top, and now I've graded out. I don't think it's market top. I think we're starting to break out again. So, and I mentioned the Shanghai, but it's broken this downtrend. It's turned up right at zero, crossed its signal line, moving higher. I mean, this is just bullish. Now, if it starts to get back above that July high, all of a sudden we'll be at 6-month highs, and bing, things are optimistic in the trade. Here's the Nikkei, and again, the downtrend line starting to break out. On the daily chart here, we got a little island in April that we have to get through, but other than that, we go all the way back into December, up around this level. So it wouldn't take much for the Nikkei to jump all of a sudden to 10-month highs after being at 6-month lows just a month ago. So big moves. US dollar, let's talk about the dollar. The dollar had a down week, so pushed to the high, got up to that trend line. We talked about this a while ago, last week and the week before. Got up against the line, fell apart, and all of a sudden the commodities started to rip. And then it's pulling down hard here. The momentum curve is turning over, but look where it's turning over on this big picture. And so this is so important to me. If this is going to fail right here, and again, we're seeing the big moves in the yen. We're seeing the big moves in, European stocks starting to break out to the upside. We're seeing Canadian stocks breaking out. Usually that makes a move into the emerging market currencies, all that kind of stuff. And we should see the dollar roll over here. If that was going to happen, I think that lights the fire for the big bull engine here, and we start to get a big move in EEM. and some of these other areas of the market that have been, I'll call it, flushed out for a while. So big picture on the US dollar, just trying to, at 97.83, this red line's at 97.50. We'll just keep watching. This is the trend line I mentioned that it had broken, which goes back to the June lows. And so, here we are in September, roughly 90 days later, we've broken the trend line and starting to roll over. And on the daily, right at the place where we thought we might have a problem, got up to this red line and just rolled right over. So to me, the dollar is going to be undecided. We'll see how it handles the OPEC and the oil, how it handles the Fed meeting, quadruple witching. There's a lot of action this week, so stay tuned for a bit of an event. Looking at the UUP to use this daily version, what we're seeing here is a lower high on momentum. Price is still holding up the uptrend on the UUP, not so much on the actual US dollar. So, or on the not the ETF, the base dollar weighted index. And again, that trend line that I had drawn was off this June low, and you can see how that's broken here too, but not to the same extent. So these tracking ETFs, a little bit different. Here's the euro, and you can see it had a big outside week, lower low, higher high, and closed near the highs. That's very bullish. Look at this downslope and momentum here. If this is going to start to turn up here, that's pretty good. And again, it was all on the back of Draghi's final press conference. So here's the German DAX trying to break through its prior high, and it wouldn't take much to get to new 52-week highs, would it? All of a sudden, Germany, manufacturing slowdown, all that discussion, and boom, this thing is taken off to 52-week highs. So keep watching that. That's what I'm expecting to start to happen. The euro just going in on a daily basis here. What doesn't make sense? Well, it would be good if that chart was updating, so that's a problem. Let's just type in today and hit update. And we're good, and we'll just save that. That's better. And now we see that big outside move. I usually skip over this daily chart, but all of a sudden we're seeing this big outside move and a push up, obviously bullish. So trying to break a little downtrend in momentum here. If this starts to turn up, I just think it kind of adds more pressure to the US dollar rolling over. I would have expected this Swedish krona to change, and maybe one of the reasons it hasn't is because it's not updated. So let's just save that there. And what we want to see on this chart, obviously, is a break of this downtrend line that's been going on for 2 years, and that would kind of convince me that perhaps the euro is really ready for a big uptrend. British pound, Boris got in here, 2 weeks of down thrust, and now all of a sudden we're working higher for 6 weeks. So looks like it's ready to go, and PPO about to cross, break this downtrend. From my perspective, this looks like it wants to go all the way back up and test this 65-week moving average. On the daily, no real news there. Let's just keep rolling. Here's the yen, and the point I want to make on the yen is gold TLT, the yen, the tips, municipal bond funds, all of them have kind of been tracking the same, and now all of a sudden they look like they're rolling over. So to me, this big move down in the yen, like it literally opened where it closed on last week and fell all week, straight down. And the PPO has rolled over onto a sell signal here, roughly a 3 or 4 month trend line. So a little, the shortest level I like to kind of draw in here. But if this was going to fail here, again, we saw this back in early 2018. And as the yen pulled back, watching quite closely to see what's going on. So here's the horizontal resistance going back years for the yen right at this 95 level. So it actually hit it, failed at it, and here we go again. And the Nikkei is obviously taken off to the other side, so that's good. Daily version back below its 65-day moving average and just went right through it after finding support at it the last time. Even the prior time before it didn't quite get down to it. Here we've dropped kind of meaningfully below here, so perhaps we're on the new side where we stay under the bottom of the 65-week moving average for a while. Canadian dollar was just wobbling kind of in the range of last week, so nothing really major to talk about. I will say the PPO rolled over, which surprises me on the weekly basis. I thought we might be turning back up here and starting to go on a run. So we'll just see, but I think Canadian dollar usually follows crude, or crude follows the Canadian dollar one way or the other. So if crude's going to pop tomorrow, I would expect the Canadian dollar to probably follow along, and that would put it above that blue trend line that is dangling in front of us here. So we can see the resistance. If this is the force to get us through, then we have to get through that $77 level. And that's the daily. So it had a weak Friday, but crude also had a weak Friday. So again, now crude going to have a strong Monday. So we'll keep all of these commodity countries in focus. Look at the euro trying to break a 2-year downtrend on a PPO. Again, if commodities start to run tomorrow, that should help the Aussie dollar, and Aussie dollar pushing up through 70 would start to change some things here, because that would be back through what was resistance, or what was support, now resistance. If it can get through that, that's pretty good. And then we'd expect to see it get through the 65-week moving average. This is the one I want to talk about a little bit more. So one of the things, when commodities do well, we start to see the emerging market currency move up. And 2011, I got a really informative lesson about the correlation between the emerging market currencies and commodities from a man who does intermarket work, John Murphy. And what John mentioned here was a lot of times you'll see these track similarly. So I've put copper on this chart, and what you see is the moves are pretty similar. They might be at a different exaggeration or a different scale, but we kind of see they zig and zag together. But if we saw the PPO starting to turn up right at zero here, that's a pretty informative place on the chart. And what we want to see is, as that happens, as that breakout starts to turn around, if this is going to bounce off zero, I think that's a very bullish place to get on board. And as you can see, we've only had a brief move above this zero line. And that was really everything turned up together worldwide, and we had a big run through 2017. If that's what's about to start right now, that would be big. I guess the real question comes down to is if we end up having more war in the Middle East, that would be a big issue. So here we are with the PPO right at zero, trying to get above zero on the CEW on the daily. So this is the emerging market currencies tracking ETF on a daily chart. So starting to see this move above the 200-day moving average. Again, it's going up. So what we saw with gold is gold just kind of kept going and going and going, and now all of a sudden it's falling apart, and it's doing that more in concert with the rest of the bond market. Okay, here's LIBOR. As we get into the bonds, you can just see rolling over. This is the HYG, so the high yield ETF, and a breakout here is very bullish, so we want to watch for that. That would be helpful. But you can see this, look at this big rollover, basically got up to prior highs and has rolled right over and slammed back down through the 10-week moving average. That looks like a big reversal to me. And guess what level it happened at? Right at this 2% level on the PPO, which is up near, two of the prior highs and two of the other highs. It got a little bit further along, but not much. And then that was kind of the end of the momentum wave. So I'd say we're as stretched as we're going to get on these bonds, and they probably have room to pull back. That's my feel. So when we take the ratio of HYG to IEF, we're back on an uptrend, but we're not back through the moving average yet. So we'd like to see that probably start to show up. With the LQD, the corporate bonds, we saw those roll over as well, and they broke through their 10-week moving average, which was support all the way through from late November or whatever. This has been going up, 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 and all of a sudden it's rolling over right now. I think that's a trend change. And again, you can see this big major horizontal blue line here. We're going to probably come down and touch that this week. Here's the tips. The inflation protected bond ETF. This has been rolling over with gold and copper, and with the rest of the bonds rolling over. It'd be very interesting to see how it rolls over in the face of oil kind of popping like that. So as we look here, this ETF has, the PPO has given us a sell signal, or MACD again. I should go change those. But anyway, as we work through this, I think these bond yields are about to give it back, and this looks like an exhaustion move to me, and starting to trend the other way. So here's the MYI, my BlackRock Municipal Bond Fund, and what we see here is a big uptrend that's been going on literally since October 1. All of a sudden it's changing on the other side. To me, this looks like an exhaustion move down, and we'll probably see this drop, and as it drops away, then I would expect the moves back into these other markets. Now with the Middle East thing, perhaps I'm just too optimistic, and that'll put more pressure on the global stock markets, but I actually think it'll be a commodity focused event, and we'll be focused on the Fed quad witching and some of these emerging market countries starting to pop up a little bit. Okay, the TNX, I think the next chart's a little easier. This is just very unfortunate for Jamie Dimon. He said, get ready for 5% now. Last week, he said they're preparing for negative interest rates, and boom, what happens? All of a sudden, this thing takes off a rocket the other way. So if this downsloping trend line right in here on the PPO starts to turn higher, I would suggest that that's probably the big bull move. Some people might wonder why the full stochastic hasn't started to kick up here, but the big reason is it takes an average, a 3-period average, and so next week we'll probably see this go kaping all the way to the top. And here's the 5-year, and it's right on this downtrend line for 1 year. The PPO has broken its downtrend that goes back 2 years, so I think we're on a trend change in the bond market. US 2-year just soared and moved back above the 10-week moving average, so I think we're on our way here. That looks ready to rock. Got just a couple of minutes left. So the one thing I do want to mention here as we go forward, and why is that popping up on my list? I have no idea. What I do want to see over the next couple of weeks is just how bonds reverse, and if that goes forward, I think that would kind of be one of the bigger signals. And here's the 30-year. Look at that move down. That was rapid, and from a very high level on the MACD and up on the PPO. We've been talking about this for a while, but it was up at the 3% level. Okay, lastly, I am about to get my subscription service working for my weekly newsletter that will become a subscription. And on that, if you would like to get updated when that newsletter is available and the website's ready to take subscriptions and that kind of thing, just enter your email in here, or come down here and put your name and email information in, and add a quick little message and just say, Greg, interested in your newsletter or whatever, blah, blah, blah. And then once we get the pricing out to you, then you can make a decision. But I'll try and make sure for everybody who's new to it and has been listening for a while that there'd be a heck of a deal to make sure that I can keep providing information to you. One of the big issues as we go forward over the next week will obviously be the Middle East. I think the big thing, we've been talking about the energy and all of the commodities starting to surge. I expect that to continue. I think the industrials will break out to new highs on the back of The defense stocks starting to roar. The energy stocks will run. I still think this bond move is well underway. So I'm not expecting those three things to change. All of that sets up with a lot of overlay with the Fed meeting and the quad witching. We're going to have a big week. So stay tuned. Good luck out there. And I'm thinking it's going to be good. I'll be in Minneapolis on Tuesday. If anybody gets the chance to join that CMT Association meeting out there, that would be great. Thanks for taking the time to join me. Lots to talk about. Have a great week. Bye-bye.